Yo, yo, yo. Welcome back to the channel. Oh, it is so late. It's 1:30 in the morning, but I was hungry, so I got up to get a midnight snack, and I started watching YouTube and got in a little rabbit hole. Now I can't sleep, and I was like, dude, I should make a video. Like, today was such a big day. SPY up 3%. Had a perfect bounce off of the uptrend as we described in the video yesterday. So let's talk about what we think is going to happen. I will say this. We were calling for for a lower move because we had the uptrend drawn based on pre and post market, before and after market hours, pre market, after hours. And if you see here, you actually didn't get the touch. The touch of the trend line actually happened on the daily chart. So what I would say is a good takeaway, lesson, whatever, might be to make sure that you're also like contextualizing the day by using a higher time frame for your trend that doesn't necessarily include pre-market and after hours. Even though those sessions do matter and they do contribute to support and resistance, also things that are within the session alone are very key as well. So just be paying attention to that. Let me take this gum out right quick. Wait, how do I get out of the camera? It's making my mouth a little bit too moist. Water tonight. All right. So everybody is super bullish now. Also of note, I know that we've talked about before that this 707 pretty much perfectly predicted the top of this move over here, combined with this downtrend, the macro downtrend. And so what we were expecting was that you were going to have this sort of correlation play out where the 707 test gets dragged out to December. As you can see, that's not what occurred. We have broken this local 707 now. So we're breaking all the rules. So what does this make me? Does this make me bullish, bearish, indecisive? I would say that we haven't broken, right? We haven't broken the macro downtrend. Until we break this macro downtrend, which has 3 successful rejections, it's, we're not out of a bear market, right? We've been here for the entirety of the year, okay? And so this should play as significant resistance. I am expecting, going into tomorrow, I'm not so one-sided. I mean, we'll see where we're at open when we watch futures overnight. You're slightly red right now with futures. But I do think that overall, the trend will be that you come back and you're tightening up here. If you look, the apex of these two trends is on December 14th. I know, I'm almost positive that the next rate meeting, where they discuss how much they're going to raise rates by, is in this. I think it's this week. I think it's the week of December 12th, if I'm not mistaken. Correct me if I'm wrong. So that, right, signals to me that the likelihood is that we do play this out pretty deeply. We just continue to trade and be relatively range bound until we get to the week of December 12th. And then that's when you have the potential for a big move. And it's going to be tough. It's going to be tough at that point, guys, because, I think that they're going to do everything in their power to make this a super choppy move going to this. What I will say is, bulls, if you want to be bullish, you want to see, as we have said this on the channel over and over and over again. You want to see And I mean, you could pop up here, but overall, what you want to see is this sort of accumulative rounding bottom structure that is doing what it can to shake bulls out, to make people lose confidence. But you can see here, it's going to be holding $400 at that point, probably. I don't see you sinking any lower. And I know this trend line is not perfect because we changed time frames, everything like that. But you get what I'm saying. I think you're going to maintain this uptrend and maintain the downtrend up until that week. So what's that range, right? Well, the range starts at around $412, which actually makes quite a bit of sense because that is the 786 of this move here, I believe. Yeah, 412. I mean, look, that actually makes a lot of sense that you just pop up and test here. And I will say that based on the way that Fibonacci has been working in this market, extending past the 707 and testing the 786 to either direction is normally a signal that you are going to eventually make a big break to that direction. So that is bullish in this particular scenario. It's not the only thing that I'm going to be paying attention to. In fact, it's far from it. Yeah, so I mean, tomorrow I could see that quick pop up. What is that? In 1 hour. I mean, maybe in the morning. I don't know. But overall, you want to see a shakeout from here. If you want to be bullish, you want to see this sort of like springy action where you come back, test 400, and then you try and climb up. That's ideal if you want to be bullish. You have to build up momentum before you get to this trend line. You can't. You just can't. You're not going to, in my opinion, you're not under any circumstances. And if you break through this trend line, okay? If you break through this trend line before this meeting, okay? And then this meeting happens and you test this apex, oh my God. I would have to look at the volume at that stage, I suppose. What do I think of that? Oh, man. Yeah, I wouldn't want to make a decision on that right now. I would have to see the momentum. If it does this arcing motion like this and goes here, that's probably bad, and maybe you like bear crawl down here. Or if you break down below, then that's really ugly. That's like that's like your dream crash sort of scenario where things can get rapidly. I mean, because you're immediately going to be pretty much hunting the midline. And at that stage, right, if you just did this, boom, at that stage, the midline would be all the way down here, like 350. I mean, you could see an extremely fast shakeout occur over the course of a few weeks. But again, I mean, if you break it in that manner and then you just kind of ride along in this way, then you could convince me that maybe a bull case is there. And even if you continue further down and retest 405 at that stage, then you could convince me a bull case is there. But I think that the ultimate likelihood is that you remain relatively range bound here, okay? And if you hang relatively low in the range, my bias will be bullish going into this trend line. And if you hang relatively high, right, I'm going to assume the effort would then be distributive, and then I would be technically bearish. Simba just disconnected the camera. The camera is reconnected. Thank you, Simba. At least you didn't turn off my computer like you did that one time. So, I mean, outlook for tomorrow, it's really hard to tell, honestly. I mean, let's see, what does futures look like right now? Yeah, I mean, futures is just kind of flailing around here, isn't it? I mean, this obviously looks relatively distributive in nature because it's on the top of this frickin' rocket. I would say if you break here at the 4080, and then you break through the 40.70, then you could see that you get back down to 40.42. And then you reaccumulate. So that's a scenario. But also, you could definitely see the scenario where they just kind of pop it up and just really just punish bears. But at that stage, I think that that would be your macro trend line test, and that would be a really good short opportunity, in my opinion. Not financial advice. Do whatever you want. Don't endanger yourself because a guy on YouTube told you something. Trading is very reactive. It's very emotional a lot of times if you don't know what you're doing, so proceed with caution. But yeah, that's pretty much how I'm feeling. I'm relatively indecisive at the moment. I think the likelihood is that you have a serious chop fest between 400 and 410. And to be honest with you, that makes a lot of sense because this now that I say that out loud, it's reminding me that this zone is heavily undertraded. I mean, this is if you pull up, we might have talked about this on the channel recently, but if you pull up your VRVP, your bitch, ooh, I said bitch. I have been saying VPVR. And then and you know what's funny about that is that when I would hear people say VRVP, I would not make fun of them aloud, but in my head I'd be like, why is he saying VRVP? That's not what it is. So I don't know if I'm having like a Mandela effect or something where it or maybe like TradingView changed it. Like it used to be VPVR on TradingView. I'm sure that it's called both, depending on the platform or who you're listening to. But that yeah. Anyway, this range, we have literally spent no time between 400 and 410. It's extremely undertraded. And if you remember correctly, most of the time you're having these like really sharp moves through this region. So like let me take that let me take the point of control off here just for the purposes of this part of the video. And let's just go 410. Boop. And then we'll go 400. Boop. You can see that you just kind of like every time that you get this support here, right? You come here, every time you get to this part of the chart, you've just traded like right through it. Like you're spending like literally no time here. Whoop, whoop, like you just shoot right through. Even here, whoop, whoop, like real quick. And so it would make sense for you to kind of just like, and obviously lower time frame, it'll look better than this. But build up some liquidity here. The reason that this is important is just because institutions want to see, before they are ready to mark price up or down, typically, especially at key levels, they want to see some chop occur here to determine supply and demand within that range. And usually, if that doesn't happen, price will generally be drawn in that direction. Not that it's 100% foolproof, but it is something that will increase the odds of a move, right? So if you're if you're moving vertically towards it or downwardly toward, vertically is up or down no matter what. But if you're if you're moving down towards a region or up towards a region that has a very significant significantly lower relative volume to the regions around, which is some people will say it's like an air pocket, right? It's like a pocket, or it's sitting between two volume shelves is something that you'll also hear people say. Price will generally be drawn there because institutions want to test supply and demand in that region. And it actually can be pretty extreme in some cases where you can kind of see really big eventualities play out because institutions want to go test liquidity in a different price range. So yeah, that's pretty much the video. Dave is not necessarily bullish or bearish. I will say that if we test the macro downtrend, especially early on like this, I I am going to be looking for the short side personally. If we trade above it, I'm going to get out of my shorts. I'm going to wait for it to re-enter. Then I'll re-enter shorts if that occurs, see a bull trap happen, something like that. If we confirm it as support, then I'm going to be a little bit more indecisive, but be leaning towards the bull side unless I see weakness in the structure. If we see distributive structure play out, then obviously I'll change my mind. But I don't want to be short above that trend line until I see some confirmation, and I don't want to be long, like really long below it, especially if you're like, testing it until I see confirmation that we're going to get pushed through. And I don't see that just yet. As a side note, I know it's been a while since I've said this, so I just want to reiterate. This structure, and look, if you've been following the channel, we've done really well overall. We've seen pullbacks when we thought we would see them. If you guys remember correctly, once I started to see support building up around 360 here, and then the midline's a little messed up here. I don't know why, but once I started to see support build up here, I was like, okay, I'm starting to see some accumulative structure play out here. We come up, we test the midline. We called for the breakdown, had a big nasty breakdown here. I'm not going to lie, we did get kind of bearish here for a second. And we were like, look, if you make a new low, that's pretty bad, blah, blah, blah. But it is still overall an accumulative structure. Boom, boom. You had this crazy day. Remember this day where it went down 3% and back up 4% or something. But since then, since we've been in this uptrend, we've been bullish. And once we saw that midline break, we were like, hey, look, it's bullish moves. Dips are buying opportunities. We got up here. We were calling for the short side here. Didn't get our price target to the downside, but we saw some big moves down. On Twitter, we were calling for the downside. Here, we saw this as a UTAD. Played out, tested our trend line. Look. You know what I'm saying? Not to toot my own horn, but we've done okay here with the calls. So, yeah. Next, we just gotta see some confirmation. Anytime you have a big move like this, the likelihood is that you're gonna have a pullback, right? Like, you're not just gonna go to the moon forever. Maybe you see a move like this, right, where you kind of have this distributive structure play out. Again, you don't want to break this uptrend. You break this uptrend before you break this downtrend. And especially if you make a new low, like you go below, like maybe you break like 398, and then especially if you make a new low on this 393 region that you just found support on, that's pretty bearish, and things can get really ugly. But I'd say overall, like, I'm still leaning bullish, this literally looks like the Wyckoff accumulation schematic, like, and I'm not saying that means that it is, but, the chart looks good. It does. You're finding support where you want to find support. It's good. You kind of had that going on back here a little bit, right? You got rejected at the midline. You found a new low here. It's not quite it, right? Alternatively here, you went to the midline, you broke it, you found new support on it, and you push back up. Our bias is that the likelihood is that you get rejected by the downtrend again, but right now, this is the best looking the chart for sure. The most volume, the best looking the chart has been leading up to this test yet. Okay? Out of all the other tests. No doubt. There's like no volume on these moves, no bullish volume on these moves up here. Here you have a lot more volume activity. So, what are you gonna do, dude? I would love to short this thing below this uptrend. Okay, I don't necessarily think I would like the real life implications of that, because then gas will probably be $5 a gallon or whatever, but and then Tostitos bags are gonna be $7 $1,000, which I wouldn't prefer because I love Tostitos. I actually just ate some. That was my midnight snack. Some Tostitos. It's a snack that my dad used to make when I was a kid. Like whenever we would need a snack at like 8 o'clock or something, we would get Tostitos and we would put jalapeno like slices on top of the Tostitos and then some cheese and throw it in the microwave for like 45 seconds to a minute. Melt the cheese. Delicious. Highly recommend. But okay, I've drawn this out far too long. 20 minutes. You get a 20-minute Dave at 1:50 a.m. You know, this video is probably not going to post until like 3 in the morning Central. You know, what's better than that, you know? All right. Have a good night.